Hello and welcome to the HOA Show, where we discuss the news, problems, trends, and critical issues relating to life in a homeowner association. Join us every episode, and together we'll explore how to survive and thrive in the dizzying world of HOAs.
Hello and welcome to the HOA Show. I'm your host, Ryan Gazelle, and in this episode we'll be discussing soft story construction. I'm joined today by Dilip Khatri, PhD. Dilip has been a structural engineer for 41 years and is licensed across the United States, Canada, and Australia. He's very involved in the Community Association Institute, having spoken and written articles for multiple chapters throughout the years. Thanks for joining us today, Dilip.
Thank you for inviting me.
So let's talk about soft story construction. First off, what is it?
Soft story construction is pertaining to buildings that fit a particular era of time frame, mostly constructed before 1980, although there are many that were constructed after 1980, but legally the definition under the ordinance is buildings built before 1979. And specifically, these are buildings that have a weak structural element on the first story. That's why they're called soft story. And they became a topic of concern after the Northridge earthquake because several of these buildings collapsed. They've collapsed in other parts of the world as well, but the Northridge earthquake in 1994 really brought attention to it, specifically the Northridge Meadows apartments, which collapsed and 16 people died in that event.
That's the one where you see the pictures and the building just looks like it's pancaked, collapsed straight down on the ground from the second story, right?
That's correct. That's correct. So there's been a movement to retrofit these buildings because there are literally thousands of them in the state of California. There's thousands of them actually up and down the West Coast in seismically active areas. So there's been a push to get these buildings retrofit because they are prone to collapse and very dangerous in earthquake situations. That's the terminology.
Why did they build them like that in the first place? Were they not aware that there was a potential structural vulnerability?
That's a great question. It boils down to money. Parking is a premium, particularly in California. And so creating space and satisfying parking requirements has always been and continues to be a significant economic driver. So putting parking into any type of development, apartment buildings, condominium structures, going subterranean is very expensive. Now, that could easily triple your construction costs. So having it above ground and tucking it underneath the building is a very cost-effective way to satisfy your parking and still create space. The problem is that when you do that, these buildings were not properly designed for seismic and lateral earthquake. And basically, the short answer is that they ignored it. And it wasn't enforced by any of the building departments because, unfortunately, it does take a catastrophe for us to improve, I'm sorry to say. But the bottom line is that we've improved our codes today to not allow that to happen. But there's a legacy of buildings out there, thousands of them, that need to be addressed.
Yeah, you mentioned the term tuck under, which is something that we hear, and we do a lot of earthquake insurance. So most of the insurance carriers will call it tuck under, colloquially. So in my head, when I see those buildings, like you said, it looks like they've just tucked the parking right underneath that second story living space or even second and third story living space. And usually what we see it looks like the building's kind of on stilts. It's jutting out and it looks like it's just being held up by these poles going across a large portion of the parking area or the first floor. Is that correct?
That's correct. That's correct. And in many cases, there are literally these vertical poles are like I've seen some of them where the diameter of the pole is like 3 inches.
Wow.
They're really, really very cheaply constructed. They were optimized for cost so that the developer could spend as least amount of money as possible. And, developers are not noted for, doing necessarily the best for the safety. So that's where codes come in, because otherwise, they'll just build whatever they want to build. And this lesson has been learned and relearned, not just in California, but also in other countries like in Turkey, because Turkey has thousands of buildings like this, and they collapse by the thousands. So it's a well-established fact, and now it's proven. There's no need to do any testing on it. There's been a lot of testing done. We've identified the problem. We know what the solution is. Now it's a question of the will and the way to make the market conform to fix these buildings, and that is not an easy process because it's expensive. It has to be done with private money, and it's not cheap. And anything where you have to do something with private money involves regulation, which is a hot button word in any capacity. It's become a political battle now, but from a technical standpoint, it's very straightforward what needs to be done.
Before we get into the retrofit, as far as identifying your soft story or tuck under parking goes, is there a hard and fast rule for how many parking spots there can be? Like if you've got a regular standard 2-car garage, you've just got a 2-car space open. You don't have a pole or a support in the middle of that. Would that be structurally sound? Does it become unstructurally sound after 3 spots or 4 spots?
So I'll give you what the regulation says, and then I'll tell you what the common sense rules are. Regulation for the soft story ordinance, specifically for LA City, which has been pretty much copy pasted for the other cities that are adopting it. Remember that right now the soft story ordinance has been in effect for LA City, San Francisco, and Sacramento. But LA County has 88 cities, out of which I think maybe 10 of them have adopted soft story. So according to that regulation, it's any building with 4 units or more that has a soft story would qualify under the ordinance for retrofit. But by definition, the structural definition of soft story can apply to a single unit, can be a soft story as well as a 4 unit. And the reason they've excluded single units or 2 units is that they have specifically excluded houses, single family homes, which many of them are soft story, but they're not being mandated. But that doesn't mean that they're not soft story, because by definition, a garage, when it opens up and goes underneath a floor space, if it doesn't have the adequate lateral shear resistance, it's a soft story. So it could be even one garage and still be a soft story. That's the technical definition. But the legal definition, as far as the ordinance goes, is 4 units or more.
Okay. So in terms of retrofitting, if you're in one of the cities that's requiring it, it's 4 or more. But if you are just living and curious about whether or not your garage is safe, it may not be, just because you don't meet that legal definition.
Correct. And I have clients right now in condominium buildings which have, say, 10 garages, which are all soft story because they have 2 floors on top of those garages. There are many buildings. I have specifically one client right now, but they were not, and they're in the city of Los Angeles. You can tell it's a soft story. You walk on the project site, you look at the photographs, you can tell that it's a soft story, but they were not cited because their construction date was 1980. So they escaped the citation and the provisions. And I've told them, and that particular site in question is sitting right on top of an earthquake fault. And I've told them that they're soft story, and they're like, well, we didn't get cited, so we're not going to worry about it.
Wow. So the ordinance that was passed allows you to be grandfathered in if you were built prior to 1980.
After 1980.
If you were built after 1980, then you're grandfathered in.
Yeah.
Which kind of is the reverse of grandfathering in my mind.
Yeah.
You're newborn in.
That would be your millennial in, or whatever generation. I don't know what generation that is, but
that makes no sense.
It makes no sense. But remember that, without trying to sound offensive to anyone, these laws are written by lawyers and politicians, not by engineers. So
absolutely.
So that means that there's a lot of, negotiating that goes on in Sacramento and at these city council meetings to exclude and include and exclude and this and that. And remember, there's also a real estate lobby. So these laws are not written by engineers, that's for sure, because it does not make any logical sense. If your building was built just one day after that 1979 ordinance, which would be January 1st, 1980, you will be excluded from this ordinance, even though you could be in a soft story sitting right on top of a major earthquake fault and at major risk, but you will be excluded and you will not be mandated.
So you mentioned earlier that there was a significantly higher rate of failure for soft story construction buildings after the Northridge earthquake and other earthquakes.
Correct.
Is there any kind of a percentage that you're aware of what are the odds if I've got a soft story construction building and there's an earthquake within? Obviously, it would depend on how close I am to fault lines and maybe the liquefaction in my area. I don't know.
Yes. Yes. Well, there's no probability matrix, so to speak. However, we have a software program. We have actually a protocol system, which is called probable maximum loss. It's called the PML. Probable maximum loss, it's a rating sheet that's used to assign an earthquake risk to a building. And this is used in the financial industry by insurance companies and banks. And what it is, it's a rating system. It's just like if you think of your credit rating, when you go and apply for a credit card, there's a credit rating assigned to you as a borrower, and the bank uses the credit rating to assess how much of a risk you are. And if your credit rating is really low, you don't get the loan, or you get the loan on very high terms, right? PML is the earthquake risk rating used in the insurance and finance industry to rate buildings. And the PML works like this. It is called probable maximum loss. And the rating goes from 0 to 100, meaning that it's done through a technical process. It's a software program. And so it's not subjective, not entirely subjective. They've tried to make it objective. And what the rating means is that it gives a risk rating based upon the probable cost of damage related to the replacement cost value. Let me explain that. If your building is worth $1 million and your PML rating is 20%.
By worth, you mean if they estimate the cost to rebuild being $1 million, not real estate value?
Not real estate value, the replacement cost value. So let's say your building is a replacement cost value of $1 million and your PML is 20%. What that's telling the bank is that in the event of an earthquake with such and such standardized probabilities, which they've standardized in the industry, that they would expect to see $200,000 worth of damage to your building. That's PML. So I'll give you the parameters. And the banks do this, and insurance companies do this unbeknownst to you, the owner or the borrower. This is all being done behind the scenes because they hire firms like myself to go do the PML, which is done for them in confidence and not shared with the borrower. And so the bank takes that, and I'll just give you the rules of thumb. And it's different for every bank, but the basic rules of thumb don't change. And that is, and insurance. And that is, if your PML is over 30%, I can guarantee you, you're not getting your loan and you're not getting an insurance policy. If your PML is over 30%.
Wow.
If your PML is over 20%, 20 to 30%, you'd be considered very high risk.
What are the factors that soft story construction play in regards to PML? They exponentially increase it?
So a PML on a soft story is easily going to cross 20%, I can guarantee you. If you're a soft story, you are going to be in that high risk to uninsurable category.
Yes.
For earthquake insurance.
Yes, and that's what we've seen. Anytime you've got soft story construction, the number of carriers that are willing to quote are significantly reduced. And those carriers that are quoting with a much higher deductible and at a much higher rate.
Exactly. And, you're in the insurance business, so you know this. And you also know that the insurance market in California is, shrinking. I mean, the number of providers, insurers, because of the requirements and because of the risk. There's a presentation and an article published by myself in the CAI LA magazine in the current edition. I believe it's the August edition, where I discuss the risk rating of Southern California. And you'll be unpleased to know that Los Angeles County and Orange County, rated by FEMA, not, it's from a public federal agency. So it's not by me or by any private entity. This is rated by FEMA.
Nobody's standing to gain from this, right?
Well, I still think there's some politics, but we'll save that for conversation for later. But anyway, okay. So the risk rating, which they classify, there's colors to it. Red being the highest risk rating. LA County and Orange County have the highest risk rating in the country. That surprised me, which is higher than Florida and higher than San Francisco, which has the San Andreas Fault running to it. So LA County, Orange County have the highest property risk rating when you rate for earthquake, flood, landslide, tsunami, and all of those factors considered together, because Florida's risk is primarily linked to hurricane.
Wind, right.
And Texas is linked to, hail, tornado, and some hurricane. But California has them all, except not so much tornado. But California has them all, and California has landslide risk and all these other things. So the risk rating for Southern California surpasses that of San Francisco, which really surprised me. That's where I think some politics is involved, in my opinion, which is completely unqualified opinion, by the way. That's just me making a side note there, because how is it possible that San Francisco didn't get in the highest rating?
Right.
Somebody made a phone call. But anyway, that's neither here nor there. But the point is that this is very important. We discussed this in the article, and also I'm presenting it at a live presentation at the end of the month. But that gives, insurance companies, obviously, they're a business. They're not a charitable organization.
No, for-profit companies.
Yeah, they're for-profit and they got to make money. So, if you're an insurer, if you're an underwriter, and you can write a policy of insurance in Arizona, which is not the highest risk-rated area, and collect maybe 3/4 of the premium, why would you write a policy in Orange County? So getting back to your question, the PML is the industry standard, and you have to have a PML of under 15% to even qualify for an earthquake policy.
Now, getting back to the soft story construction ordinance that was passed, what does retrofitting one of these buildings look like? What was the ordinance? How expansive was it? It was just the city of Los Angeles?
So the ordinance was passed basically originally in 3 jurisdictions, which was San Francisco, Sacramento, and the city of LA, because those are 3 very high-risk areas.
With a lot of soft story construction.
With a lot of soft story construction. Well, the whole state has got soft story construction, but let's just say that those 3 jurisdictions were the most politically sensitive, and where the political will was there to pass the ordinance.
Understood. So what are they required to do as part of this ordinance?
So the ordinance requires the building owner, property owner, to procure the services of a structural engineer and prepare a retrofit plan, which is to strengthen that lower level soft story using various systems. Before they go into the retrofit process, the first step is the structural engineer has to qualify if the building is really a soft story. So the first step for the engineer is to qualify, because when they issued the notices, nobody from the city actually comes to your building to actually do a physical inspection. What they did was they hired a bunch of interns who worked from Google, okay?
The Google Map cars?
Yeah, I know it sounds ridiculous, but basically it's a bunch of, engineering interns who worked from Google Earth and issued the citations based upon the age of the construction and from looking at it from Google Earth. Nobody came to the building. So they issue, like, for example, I think the original citation list in LA City was over 13,000 buildings. So they issue the notices, and what the notice says is that you are deemed soft story and you have a deadline to comply, or you have to prove that you're not a soft story and be exempt. So the first step is you need to hire a structural engineer to examine your building and first of all qualify if you are soft story. The reason I'm discussing that very first step is when this ordinance came out, there was a huge influx of contractors who entered the market who had never done anything regarding earthquake retrofit. And these guys just came into this market like carpetbaggers, forgive the example, after the Civil War, who invaded the South to just exploit the situation. So there was a bunch of firms that came in and were running around giving cost estimates on every building that was cited to, okay, we can solve your soft storage building, and never actually did the pre-qualification. And I know myself personally of several clients that hired me, and I saved them at least $500,000 or more because they were not soft story. I was able to get them exempted. So the first step is, and the reason I emphasize it is for your audience to understand that just because you got the citation does not necessarily mean that you're a soft story. And I'll give you a perfect example. If your tuck under parking is constructed on reinforced masonry walls, then you are likely not a soft story. It's only if it's on wood walls. And a lot of apartment buildings, a lot of HOAs are constructed on semi-subterranean parking, which are reinforced concrete, steel, or masonry. Those are not soft story, and those are exempt. And so before you go run off and sign a contract with some of these unscrupulous vendors who will just take your money and do whatever crap they're going to do, spend a little money and hire a person who does not have a vested interest in the result, who's going to give you an honest answer. And I can't emphasize that enough because these guys have really given a bad name to the industry. The step one is to qualify. Are you soft story or are you not? Because just because the city sent you a notice does not mean that you are.
Get a second opinion, just like your oncologist. Don't take their word for it. Make sure you confirm their diagnosis.
And to use your example, make sure you go to a licensed oncologist, not to a voodoo doctor. And don't go to a person like a contracting firm who stands to gain from your retrofit and is not an engineer.
How would they know if somebody has the proper qualifications?
So the first thing is make sure that they are licensed either as a PE or an SE.
What is a PE?
A PE is a licensed professional engineer licensed by the state of California. They have the designation PE after their name, and they have a license number. Then you just look them up. Or they're a licensed SE. They have SE after their name, licensed structural engineer. If they're licensed contractors, they're not qualified to make that opinion. But they will never admit that they're not qualified. They'll just give you the opinion. Also, stay away from design build companies who claim, oh, we have engineers on staff. Because the person who comes to your site, make sure that you have a licensed engineer give you the report. Because if they're not a licensed engineer, it's worthless.
So on that report, it should say performed at the end of it, even if you're going through a construction company. If the report was issued by an engineer, it'll have those initials PE or SE by their name at the end.
Right, but there's a couple more steps beyond that. It's not just the report. So yes, first of all, it has to be signed and stamped by a professional engineer. They should be independent, capital independent of the contractor. Because if they're working for the contractor, they may be under their control. So I stay away from certain vendors who are, quote, design build companies, because they will control their engineers to skew the report in their direction. Why would a contractor want to issue an exemption letter? There's no money for them in that. And that's, ethically wrong.
But it happens.
It's happening on a massive, massive scale. And it's really sad. That's number one. And number two, it's not just getting the report. If you are exempt in the city of LA, you have to file a report with building and safety, and they will review that letter and the report to get you off the list. So it's a process, and it costs money. No engineer is going to do that for free. So if the contractor is telling you, or design build guy, or whoever it is, oh, we do the inspection for free. Oh, yeah, well, sure. Obviously, they want to do the inspection for free because guess what? They're going to find that you need to do the retrofit. So I know I'm spending a lot of time on this point, but
it's important.
It's very important because a lot of their public is not aware of this. And let's be frank with each other, okay? I'll be very frank. Let me give you the numbers. In California, we have approximately, we have too many licensed engineers, but anyway, it's around 60,000 licensed PEs, but they don't all work in this space. but we only have about maybe 8,000 licensed structural engineers. But we have over 300,000 licensed contractors, so they outnumber us. And let's be also frank, I'll make another bold statement. They have a bigger mouth than we do because we don't talk as much as they are. We're just not a talkative crowd.
Fair enough.
You have to for you to get me to do this podcast, I know what you had to go through. Okay. So, but if you were to go to a contracting firm, you'd have 10 contractors standing in line to talk with you. But I very much appreciate the invitation in all honesty.
Well, we want to get the facts out there.
We're a very quiet bunch. You're not going to see us on the news and we're busy doing the work. That's true. And plus we are outnumbered. So I think this is a very important public service. And again, I'm sorry to belabor this, but I personally have handled cases where my clients literally almost signed away a $500,000 contract. When I got them the exemption letter, they were very grateful. I got them out of that mess.
Yeah, I know that, from the insurance side of things have changed significantly in the underwriting process because now with the availability of the real estate photos and the Google Earth technology, these underwriters that are quoting a risk they can go and they can get a pretty good idea. I would hope they'd have a little more experience identifying soft story construction than these Google interns that you mentioned for the city.
Yeah, and remember that the city is just interested in casting a huge net. So out of the 13,000 buildings, they don't care if maybe only 8,000 of them are really soft story. Maybe it's half or maybe it's 12,000, but they don't care. Their job is to cast a net because remember what the city does, they will report to the mayor and the governor, oh, we've cited 13,000 buildings. We're doing our job. We're the government and we're good. And it doesn't matter. There's no penalty to them for being inaccurate. And there's no reward for them for being accurate. They just want to make a report. Oh, we've cited 13,000 buildings, even though I can guarantee you that the 13,000 number is inaccurate because of the way they do it. And number two, they've left out all the other soft story buildings that are built after 1980. So the real number could be 50,000 buildings.
Fair enough.
So, you have to pay attention to that. Now, the banks and the insurance carriers are really sharp on this because they are the ones that are putting up the money. The banks, when they hire someone to do a PML is not an expensive report. It's around a couple $1,000. We used to do them. We still do them occasionally. You pay $2,500 or $3,000 to an engineer to go look at an HOA. He gives you a PML. If the PML comes back at 35%, you are redlined. And they won't even tell you.
They'll just decline due to underwriting risks.
Exactly.
Now, once you do this retrofitting, my understanding is that the purpose of the retrofitting is not to necessarily preserve the property, but rather to preserve the property enough that folks can escape. So it's a life safety concern first and foremost. Is that correct?
Correct. The objective of the retrofit is only one objective, which is to make sure that nobody dies. It's not to save the property.
Because it's still gonna suffer structural damage by virtue of the fact.
Yeah, your building could be rendered a total loss after an earthquake, but if nobody dies, we in the engineering profession claim victory.
So the odds of the soft story construction buildings, even with the retrofitting, the structural engineer retrofitting, they're still more likely to sustain damage than a building that's not that type of construction, correct?
Absolutely. There's still high risk.
Right.
From a property standpoint. From an investor standpoint, there's still very high risk. Because even if you have the soft story retrofit approved by the city, done correctly, the perfect soft story, and you get a magnitude 7, you could still experience a PML of 70%. But if nobody dies, the engineering profession claims that as a win.
Absolutely. And I think that boards of directors would agree with you. Those are their neighbors that could potentially be killed, their kids, their families.
Yes.
But we get a lot of pushback from owners in the Los Angeles area and all throughout the state that have soft story construction saying, well, we did the retrofit how come our premiums aren't going down? And I try to tell them it's because the purpose is a life safety concern. It doesn't mean that your building's not going to sustain damage.
That's correct. And remember that PML will give you some credit for soft story, but what affects PML are two major things. It's the age of the building, when was it built, and there are certain critical dates in the timeline, which I can point out to you for your audience. There are certain critical dates where there were significant code changes. We'll talk about that in a second. But what the PML does is it looks at the date, and most importantly, it looks at the location. So if you have a soft story building that's been retrofit, I'll give you two examples. You have one building, let's make these two buildings the same size, same age. One is built in Palm Springs and one is built in Rancho Palos Verdes, okay? And the one in Rancho Palos Verdes is on an earthquake fault, on a known landslide zone, and on a liquefaction zone.
Sorry, real quick, just to point out for those listeners that don't understand, liquefaction is the measure of the amount of liquid in the soil.
Yeah, liquefaction is a condition that classifies the site as very high risk because when an earthquake hits, the soil basically liquefies and the building sinks. It's the equivalent of quicksand. So if you have your Rancho Palos Verdes example and it's on a liquefaction zone, it's on an earthquake fault, and it's in a landslide zone, and then we take my other example in Palm Springs, which is not on a liquefaction zone, not on a landslide zone, it's on a flat lot, but it's near the San Andreas Fault. Both could come back with the same PML.
Interesting.
And particularly now with what's happening in Rancho PV, I doubt you could even get an insurance policy in Rancho PV with what's happening in Rancho PV. But even now, Palm Springs, right? The San Andreas Fault runs right through Palm Springs. It's on the same fault risk as downtown San Francisco. And Palm Springs did not pass the soft story ordinance. And I've given this lecture in Palm Springs. I've given this lecture to the Coachella Valley chapter, but I had to make it very clear to the audience there that it's not mandated. So how many people do you think jumped up and down and said, hey, Dillip, we want to retrofit? Zero.
Hey, can we please special assess everybody at $10,000?
I think I only had one client. I have only one client because their building is in such bad high risk. It's just horrible. Their building is very high risk. And we made that presentation to them in 2014. And then they didn't listen to us. They didn't call us. And then they called us in 2017, unfortunately, after the Florida collapse and said, hey, get your butt out here and let's get this thing retrofit. And we prepared the plans and we got them the cost estimate. It's over $1 million. So guess what? It's not done. So, it's one of those things where, unfortunately, people don't really act on it until there's an earthquake.
And then it's too late.
Then it's too late. Now, I'm feeling they're going to call me again because of what's happened in the last few days with more earthquakes. But, coughing up $1 million or more, because I keep telling them that the longer you wait, the cost keeps going up. The $1 million estimate that I gave them was a year ago or a year and a half ago.
Building costs have gone up, right? Construction costs.
Yeah.
If a community wanted to go forward with this, you mentioned that there are different options available. So it's not a one-size-fits-all kind of a situation. You don't have to do A or B. You can do A, B, C, D, or E, and you've got to tailor the solution to the needs of the community, correct?
Correct. And that's why my recommendation is to go with a structural engineer firm as opposed to a design contractor firm. So the difference between the two is that if you go with a construction company, first of all, they're going to skip that pre-qualification process for sure. And they'll just give you a full lump sum price. And then they'll bring in the engineer under their contract because they will control him. And I know that I'm going to make some contractors mad by releasing this statement and this information. And guess what? I don't care because they should be made angry. Not all of them.
Of course. There are some, all it takes is a few bad apples to take advantage of folks.
And it shouldn't be done that way. So first of all, hire an independent structural engineer or civil engineer to do the pre-qualification and to prepare the design, because then they will be the ones to help you to optimize your costs.
And that's the best practices standpoint. If you take nothing else away from this podcast, take that away.
Take that away, and don't hire an architect, because an architect is not qualified to do this. They will bring in they will bring in a structural engineer to do it. Now you're going to be paying for two of them. So hire a professional civil engineer or a structural engineer who has experience in this area, and insurance.
The proper insurance, because some insurance policies have an exclusion for multifamily dwellings.
Correct. So I can tell you right now, as a fact, that of all the civil engineers, structural engineers that are practicing as independent practitioners or small firms, only 5% of them are insured.
Wow.
95% of them don't have insurance.
Wow.
Yeah. So that's another thing, is that they're going to come in there. And this is where I make this point very important, because, obviously we have insurance. We have a substantial policy. We've always had insurance because we work with HOAs. We work with large business. So our fees are higher because we have to pay for that insurance. But you get the benefit, the customer gets the benefit of it. But I'm not going to be able to compete with an independent solo practitioner working out of his garage who doesn't have insurance.
Absolutely.
And I can't, and I shouldn't have to. If that's who you're going to go with, then just remember what you're buying, because you're not buying someone who has any type of guarantee on their services. You're buying from someone who basically will not be able to really sustain any type of loss and will disappear.
Question that occurred to me, and going back a little bit, this soft story ordinance that was passed, when was the deadline, and is there a penalty for not complying?
Yes. It was, as I recall, 7 years.
From the date of the letter?
From the date of the letter to complete the job. And I believe it was 3 years to submit your plans. And I think this ordinance was passed, if I remember correctly, in 2017.
Sounds about right.
And so we are coming up on that deadline. And so over the past 7 years, out of the 13,000 buildings, I haven't checked lately. The City of LA publishes a system-wide status report on how many buildings have been retrofitted. So I haven't checked lately. It's been at least a year since I've checked, but I'm sure they're probably somewhere in the category of 80% that are completed. And you can get a time extension, as long as you've hired an engineer, they'll work with you on the time extension, but you've got to be responsive. You can't ignore them, because the penalty is that they'll turn you over. Eventually they will, if you don't respond and you don't do your proper due diligence, they will cite you. And then, of course, things can get really ugly. They can send you to the district attorney, and there could be prosecution and all this other stuff.
So we really don't know. It's kind of untested, since we're just about to reach that deadline.
Well, yeah, but I know for a fact that you can get an extension and they'll work with you. They're not trying to prosecute owners. What they want you to do is to do it. And they understand the financial hardship. So, but you need to have an engineer on board to file that paperwork. It's not a hard and fast, real deadline. It's more of an encouraged deadline. But you can get extensions to it, but you're not going to be able to extend it forever.
If you think you may have gotten one of these letters, and boards change, there's turnover, new management companies. So if you maybe think you may have gotten a letter in the past, or you're getting a response from your insurance broker that you've got soft story construction, because those underwriters are looking at it, you need to take action, and you need to hire a structural engineer to come out and take a look at the property, which they should be doing in a lot of cases anyway with the new civil code for the balcony inspections.
Correct. Now, there's a very simple public notice on all of the soft stories. It's very easy. You go to the City of LA website. There's a tab in there where you can search any address of any building in the City of LA, and it will tell you, because they put it on public notice, if you are soft story. So that's how the banks and the insurance companies do it. They will just look it up. And if you are soft story, boom, you're already on the red list. Any property buyer, now you would think the real estate agents would be looking for this, but you'd be shocked to know that they don't pay attention to this stuff all the time.
Not shocked at all.
Yeah. Okay. So buyers, well, astute buyers should be checking that. And it's public information. It's not a mystery. If you're on the list, and even if you haven't gotten a letter, well, you should have gotten a letter, but suppose the letter got lost or went to the wrong address or whatever, just plug your address in on the City of LA website, go to ladbs.org. You'll have to do a little search to find it. There's a whole soft story section on that website, and you can easily find out if your property is soft story or not.
Wow. Well, thank you so much. Is there anything else you'd like to add before we wrap it up?
No, well, thank you for the opportunity. I hope this has been useful. And Ryan, we've known each other for a while, and you're a fantastic host. So thank you.
Well, thank you, sir. I learned a lot from you on this podcast, and I think our listeners did as well. Some very sobering information and some great tips for how our communities can protect themselves going forward. Dilip, where can our listeners go to reach you or learn more about your firm?
You can email us, dkhatri, DKHATRI, at AOL.com. And we do have a LinkedIn page. It's under my name, Dilip Khatri, DILIPKHATRI. You can find me on LinkedIn as well. But if you have an inquiry, just email us, and then we do respond back to emails.
I love it. Holding strong with that AOL address. All right.
That is a date stamp on me.
It sure is. But with that date stamp comes a wealth of experience, which is very valuable in your field. That's our show for today. A special thanks to our guest, Dilip Khatri. As we end our episode, we'd like to remind our listeners that if you have any comments, questions, or suggestions for topics you'd like to learn about, you can email us here at feedback@hoashow.org. Join us next time on The HOA Show.
To share or subscribe to the HOA Show, visit us at hoashow.org. There, you'll be able to listen to other episodes, find helpful resources relating to HOAs, provide feedback, submit questions, and check out other great stuff. The HOA Show podcast has been made possible by the contributions of Klein Agency Insurance Brokers, leaders in the community association industry. The views and opinions expressed by the podcast, its presenters and guests, do not constitute legal advice. For more information on how the topics in discussion apply to you, please consult with your own legal counsel.